Cash rules everything around us. Money is a tool, it shouldn't confound us. We show you the do's and don'ts, the ins and outs. The financial world is changing, we give you the roadmap. When you follow the paper, watch your paper stack. With innovative thinking that's sure to have an impact. We give facts, cause the more you know will help you navigate this road and avoid potholes.
Well, you know, like, I think what we're looking to do is establish some pillars of how we're approaching our content, right? And one of those pillars is transparency. I think that's going to be very
absolutely
key straight through.
So, you know, from the beginning, it was the biggest to me that, you know, actionable. Oh, let's go back. What is out there today for bankers? Mm-hmm. You know, when I listen to podcasts and financial that are directed toward bankers, the podcasts are led typically by somebody that knows marketing.
Yeah.
You know, and of course, marketing is one of those things that also crosses all boundaries. Every business, to a degree, has marketing that touches it.
That's right.
But what I see in this is you've got marketers that don't understand the full facets of banking, and you know, everything is, you know, that's another thing. So you know a lot.
Oh.
You know, so we have directly marketers.
When you listen to this back and you hate how you sound, then that's when you'll change.
That's when I change. So, you know, not to offend marketers, as you know, Lee, you are a marketer,
right?
But when a marketer is leading a banking podcast, at the end is why are they doing it? They're wanting to bring the most awareness. So they're bringing in businesses that are related to banking. They have no idea if that business or that idea has any substance. That's right. Going to benefit the banking.
I agree 100%.
So when I hear these companies that are coming up and everybody's touting this is the next big thing, I've been spun out and said, no, the bank is that idea is hollow. It is a waste of time.
That's right.
And so I want to strip away with that. Bankers are really the kindest and honest people around. But I think bankers themselves can easily be taken advantage of when it comes to the next thing.
Oh, easily,
you know,
yeah.
Because another industry that is a lot like banking is healthcare. So banking is completely regulated.
Right.
And so regulation is great. We need to be regulated.
Yeah.
We're insured. We're dealing with money. You know, that is the cornerstone of capitalism.
Right.
You know, we can't have the money sector. We can't, you know, we don't want to run on banks. We don't want banks defaulting. You know, we want them to succeed.
Right.
Banks succeed. The American public succeeds.
Right.
Trust in the financial system. So, but with regulation also does stifle innovation, which there's give and take in that area. But bankers have been scared to death by regulators over the years not to innovate. And so what is happening now in a cultural shift is you have this new emergence of fintech. What is fintech? Fintech is just a new made-up marketing term. That's all it is. Financial technology. Well, that's what banks are to begin with. But what we're seeing a lot now is, talks customer engagement, onboarding, customer experience, UX. All of these are terms created by marketers to sell to bankers. So now, since bankers have been scared to death to innovate, now they're dependent on hiring third parties. And what happens then that I've seen all too familiar is bankers, they're scared, thinking, well, I have to innovate. I have to now partner with third parties. And so now you never want to negotiate, from the bottom,
right?
That you need them when they're in that position. You don't want to be in that position. So what I see now is bankers are giving up too much. They're giving up too much of the percentage. They're paying too much for this. They think it's going to solve everything. It's going to, do away. It's going to create profitability instantly. Yeah. Their customers are going to love it.
It's going to pull them into that next phase of wherever things are going because they're not innovating, like you were saying.
Correct. And, innovation to them is hidden. It's something behind the curtain that they know nothing about. But innovation is not always just technology. what could be very innovative in that banker is to, hey, let's step back. Let's look at what we have now and strip it away. What are we doing that we're just completely wasting time? And so, I really subscribe a lot to, I cannot pronounce the author's names, but the Base Camp.
Yeah. The 37 Signals.
Absolutely.
Yeah.
Those guys are brilliant. They, provide an app. They started from the beginning was, here are the essentials, and then we build from there. And, that is what banking is. You start with essentials and you build from there. But as innovation has started years ago in the banking industry, all we did was keep adding on. It's like checklist based. So at some point, you need to stop. You need to wipe the slate clean and start from scratch. So before you add on this newfangled onboarding, you've got to get your house in order. Onboarding
meaning the fintech revolution of let's bring on as many people as we can by the masses. And
absolutely.
That's pretty much
this is going to, customer engagement is here, but customer engagement is not just, we opened up an account. The ease of opening an account. Now they don't have to come into a local branch. Now they can do it online. And so, now they're fixated on that front end. But it doesn't matter how great of an experience that front end is. If you don't have your back end, your operations, your smoothness, none of that matters. You are just going to add a ton of people onto your platform, and your operations team is not going to know what to do, and you're just going to create havoc.
Yeah, I can't wait till we get more into that because, a question I have is why have bankers historically been scared to innovate?
From what I've seen, that largely comes down to regulations. And it's not the regulations themselves. It's the attitude of examiners when they come in.
Okay.
At least in the banking system, every 18 months, when you're in a good position, you're a healthy institution, strong capital levels, and good economic times, you typically are audited at least every 18 months by one of the major, banking regulations. We are under the state of Florida. Our charter's in Florida, so we Office of Financial, the Division of Finance here in Florida, and the FDIC, Federal Deposit Insurance Corporation. And when they come and audit, these auditors, they're trained, they have a specific scope. But some of things are out of the spoke. So if they don't have, an expertise on that knowledge, a lot of times they're going to scare you to death with risk. They can't quantify risk. They want you to quantify it.
Right.
But they scare you. So if you're creating
and that's their job,
software as a service, they're going to scare you and say, did you get a SOC 2 audit? Did you get these audits? Oh, that's very costly. That could be this. So they are giving their opinion when actually they have no basis of giving that opinion.
They're like that.
Begin with.
They're like that negative family member.
Absolutely.
Whenever you say, "Hey, I'm thinking about this new thing," and they're like, "Well, have you thought about this?"
And when you're looking at the position they're in, you cannot blame them, because going back, an examiner has a job to do. They need to examine the bank for a sound banking system. So in being, and creating a sound banking system, they're not there to tell you what you're doing right.
Correct.
And I've never known of an examiner, and I've asked them this many times. I mean, are they going to get promoted for telling every bank they're being right? If you don't have findings, how are you going to set yourself out from the pack?
They're there to mitigate your risk and their risk.
Yeah, the insurance fund's risk.
Right.
So, they don't change the status quo.
Right. So that's the interaction that bankers have with the outside world, is that risk mitigator. And they're not interacting, it seems like from my standpoint, they're not interacting with innovators. They're just interacting with the people who are talking about the downside, not the upside.
Absolutely. So it's all downside. And, if they come in and audit a bank and they give good ratings, everything's fine. They give some recommendations. The bank says, we're going to implement this, have a meeting. We'll see you next time. And in between that time, if that bank goes out and does something that they missed, what's going to happen? They're going to get a call from their higher ups and say, you just audited Surety Bank, and now their financials are horrible. They took on this huge loss. So do you think heads are going to roll then? Everybody is a Monday morning quarterback when it comes to regulation.
Right.
If something happens, who's to blame? So, they're put in that position. So it's a difficult position to be.
It's a fearful
Absolutely.
Position that most bank leaders, CEOs, boards sit in front of. Their vantage point is I wouldn't say it's fear, but it's heavily
it's risk. You have risk versus reward.
Right.
But if you can't identify risk, then that's going to outweigh. How are you going to mitigate? How are you going to
put
it down?
If you can't identify what potentially could be a reward, you're not looking into anything that you could then look at what the risk of that is.
And in banking too, when you have an idea, it's not like, I have dreams about running a business that is not heavily regulated, because then you could just test any idea really quick.
Right,
hey, does it work?
Right.
But in banking, no, you can't go out there and just test this new account before even if you come out with a new idea of a new type of checking account or, basic banking account that you're going to pay this reward if you do this. You've got to run through a battery test. Are you unfair? You got to look at your marketing practices, of course. Look at the compliance. Go through a litany of questions and asking yourself, are you violating anything?
Right.
Are you even in the gray on any of these areas? And list it all. Go back to doing a SWOT analysis. And, what we have here is a
strengths,
risk.
weaknesses.
You've got to have it in your committee minutes.
Right.
You've got to have it in board minutes. And so when examiners come in and they don't run a business, they don't know what it's like. They're there to examine.
Right.
So when they see that you've created a new product, a new idea, they just want to see that you had it in your minutes, that you had an idea about an idea and that you wrote it down and discussed it with a committee. And then a month later, you had another committee and said, here, now let's move our idea forward one step and let's move an idea further. So they want to see months and years of taking one little minuscule action item to fruition. Meanwhile, my idea is, wait, why don't we just try this? Open up a new type of account, test it, see if consumers want it.
Yeah.
And then build it from there.
Right.
No.
I don't want to do that.
They want you to have all the answers prior to you launching anything new. And so that right there over the years has just completely scared bankers to death.
Right.
And so then it has made them completely smaller and regional banks, more dependent on outside companies.
And if they are a healthy bank, then the CEO is probably comfortable, right? Their leadership are comfortable. Like,
well, they get stagnant.
They get stagnant.
Yeah,
really
like any
easily,
business,
because they don't want to rock the ship.
Yeah, and that's the other thing too that I saw. When I got into banking, is it's a business like any business. We're selling accounts, and we're taking on deposits, and we're lending them out, and we're processing transactions. We have profit and loss statements. You have income. It's just like any business. The same motive to bring value to your shareholders.